So good morning, everyone. Thank you for joining our Employee Choice Voluntary Benefits webinar. The Employee Choice program is actually an Acrisure proprietary program. Before we begin it, there's just a few housekeeping items I'd like to share. We are in presentation mode, so everybody's phones are on mute. If you have any questions, feel free to place them in the chat or Q&A feature, which will be located on the toolbar at the top or bottom of your screen. We will answer, we have plenty of time for questions, and we will answer them at the end. With that, I'd like to introduce you to my coworker, Sean Ferguson, who is the Director of Voluntary Benefits at Acrisure, and Greg Kearns, who is the National Account Executive of the Limited Benefits Division with Breakpoint. Both Sean and Greg have been in the benefits world for more than 20 years and are experts in their respective fields. So I'm pleased to have them here with us today. And without further ado, I'm going to turn the presentation over to Sean and Greg.
Excellent. Well, thank you, Stephanie. And good morning, ladies and gentlemen. As mentioned, my name is Sean Ferguson, and I too am with Acrisure. And I've been in this segment of the industry, the voluntary benefit segment, for the past 20 years. And I'm excited to talk to you about employee choice here today. Before I get started, though, I'm going to turn things over to Greg Kearns, let him introduce himself as well.
Good morning, everybody. Thank you, Sean. My name's Greg Kearns. As Stephanie mentioned, I'm the National Account Executive for the Limited Benefit Department at Breakpoint. We are actually the TPA that created these employee choice plans, and we are also the program administrator. So you will be, once you put these plans in place, you'll be dealing with a singularity, which is Breakpoint, that will be the program administrator and the support function for these plans.
Excellent. Well, thank you, Greg. And folks, let's get into it. Employee choice, and I'll share my screen and some slides here in a moment. But employee choice, what we have essentially done is we've taken that approach that Amazon has taken, Netflix, Tesla, to where we cut a lot of the expenses out of the middle, and we're able to generate and build a program whereby we can go straight to the clients. This means that the premium dollars are going straight to the value of the plans itself. So we're enhancing the value not only for the employer with a return of surplus that we'll talk about here in a moment, but also for the employees. The employees are the ones that are typically using their payroll dollars, and we wanted to make sure that we're providing more value than what's been provided in the past. So without any further ado, let me go ahead and share my screen, and we'll go ahead and get started here. All right, Greg, can you see the screen okay?
Yes, thank you. Yes.
Perfect. So as mentioned, this is the industry's first ever self-funded VB captive, and there's a lot to unpack there. So what does that mean? First and foremost, each employer group, you don't have to provide any capital up front in order to join the captive. There is no cost. What this is going to do for you, though, each and every year, we're going to return 75% of the claim surplus back to each of the employer groups. Now, employers, when you receive that surplus back, it becomes a plan asset. If we're using employee dollars to pay these premiums, you receive that back, it becomes a plan asset. Simply said, you just need to spend it for the value and benefit of your employees. Some will take that to return premium back to their employees. Others might provide a rate holiday. Still, others will use it to offset other benefit expenses for the employees. Now, for those employers that actually fund this themselves, once you receive that surplus, that can go straight to your bottom line. As a company, you can do whatever you want with it. So when it's an employer-funded program, you receive that surplus back, you do what you want with it. When it's employee funded through payroll deductions, it becomes an ERISA plan asset. Next characteristic, there's no downside claims risk. Although this is a self-funded program built on an ERISA chassis to provide same price, same product across the United States and every state, there is no downside claims risk. There is an overarching stop loss that protects you. That means a smaller employer group, God forbid you have a horrible claim year, will never come back and ask you for anything more than the premiums that you're remitting on your employees' behalf. Now, I'm going to start by talking about the supplemental health benefits that are offered with employee choice, and I'm going to turn things over to Greg to talk more about some of the major medical plans, some of the medical plans like the MEC, the MVP, as well as some dental vision and some lifestyle benefits. Now, the need for sup health, we are in an industry today where premiums on major medical keeps increasing, and so we need to change plan designs each and every year. This in turn is leaving a large gap between what's coming out of employees' pocket before the major medical kicks in. The plans that I'm going to introduce, these are really to help employees with those first dollar expenses, to help them provide peace of mind that they have coverage to take care of those first dollar expenses, like deductibles, co-pays, co-insurance, and even their max out-of-pocket expenses. But all studies show employees like to be offered these plans. Even those that don't participate, they're grateful to have the opportunity. In addition, while we all know that nobody likes to be sold anything, employees like to purchase at their fingertips if they understand the value. And so we made these plans very simple to understand so that employees can make that educated decision on if it's something that makes sense for them and their loved ones. These plans, just like some of the major carriers out there, like Aflac, Colonial, Allstate, Transamerica, to name a few, they have competing products. But these plans work just like those plans in concept, in that they allow you to enhance your benefit package at no cost to your company. We're going to allow employees to pick and choose whichever plans make the most sense to them. This in turn helps you to attract and retain that higher quality employee. Because these plans pay cash directly to the insured, they'll never interfere with any other coverages that employee may have. So whether that employee participates in your major medical, a spousal plan, individual plan, makes no difference. The benefits we go through are the benefits they actually receive. So we talked about how we do things a little bit different. Again, going back to that Tesla, Amazon, Netflix approach. Today, when we look at some of the major carriers, the insurance companies in the industry, they're generating profits for their shareholders off that fund of unused claim money. Meaning, the fund that's set aside for claims, what's not paid out in claims, is generating profit for the shareholder. Those publicly traded companies have an obligation to their shareholders before their policyholders. We flip that on its head. Those profits that would typically be generated for the value of the shareholders, again, 75% of that surplus is given back to you, the employer, for the benefit of your underlying ERISA plan asset, for the underlying benefit package that you've put in place for your employees. Again, those monies can be used to help offset other benefit expenses that you may already have. So we identified three stakeholders when we put this plan together. First of which is you, the employer. This is going to return 75% of the claim surplus, again, back to you each and every year. In addition to that, we're going to show you some cost containment strategies that are going to help to lower the cost of your major medical plan by protecting risk. For the employee, these plans are offered guaranteed issue. There's takeover credit for time served, meaning if you currently offer one of those other carriers today, we can come in and replace that carrier. And even a lady that might be 9 or 8 months pregnant on a hospital plan, if our plan went into effect today, she delivered the baby tomorrow, we're still paying that claim. So no employees are negatively impacted. There's going to be high value, low cost with some never before seen built-in value adds. For the benefit administrator, a lot of times this is your HR department that's administering these plans. We made it easy to provide them peace of mind that there's confidence in implementation and in servicing this plan throughout the year. There's composite rates, meaning same price, same product for everyone. No age bands, no smoker questions. This makes it easy to enroll or to build on any enrollment platform because, again, we're not worried about various age bands or smoker status. There's no evidence of insurability to track down. These plans guaranteed issued, no evidence of insurability. And because the consistency in the way that the plans are built with that same price, same product for everybody, it's easy billing. It gives us confidence in our quality control because Acrisure accomplished what we refer to as value chain compression. We are the paper, we are the TPA, we are the sole distributors of this plan. No outside companies touch this except for us. Meaning, God forbid there is a problem, it's easy for us to resolve it and to create, again, the confidence in that quality control that the billing's going to be right and the claims are going to be right when your employees need these plans the most. The three plans that we started with are accident, hospital, and critical illness. Our accident plan designed completely different than what the market offers. For those of you that offered accident in the past, it pays for any off-the-job accidents and injuries, anything as minor as a bee sting, sunburn, poison ivy, to something as severe as a car accident where there could be nights spent in the hospital. The problem with what's existed in the market is folks have no idea what they're going to be paid on it because a broken finger might pay you a couple $100, whereas a broken hip might pay you a couple thousand. This makes it difficult for employees to plan for those $3,000, $4,000, $5,000 deductibles that we're seeing today. So what we did is we designed a plan that's called an accident expense benefit. We provide a bucket of money for employees to draw from. God forbid they get hurt. Looking at the middle option as an example, $5,000, that's a bucket of money. They turn in their EOB, we reimburse them that, or we pay that money back to them based upon the billed expenses from the facility. This means even if an employee is at their max out of pocket for the year and they don't have a dime coming out of their pocket, they still remit or submit that itemized bill or that EOB to us, and we're still paying them for the bill charges from the facility. This means that our plan's paying out a lot more value to the employees, and it's paying that benefit that it's paying out to them is really helping them to plan ahead of time for that gap again. What's coming out of their pocket before their major medical kicks in? This $5,000 is also per covered person on the plan. This means that, God forbid, there's a family of four that's in a car accident. All four now have $5,000 in coverage. To give you an example to illustrate, we had a lady that broke her tailbone. She was wrapped up in the hospital, had to have extra surgeries, some extra services. This plan paid her out $10,000. On one of the traditional plans there in the market, she would have only received a couple hundred because a tailbone is paid the same amount as a broken finger or a broken toe. This is all to illustrate that there is a lot more benefit with this plan design and a lot more protection for your employees. So again, this is the accident plan, pays you for any off-the-job accidents and injuries. This plan also helps to mitigate the risk to those Monday morning work comp claims. Because employees have a strong level of coverage outside of work, they're no longer coming to work and reasoning why that accident that happened on the weekend may have occurred at work. And so we're seeing this mitigate the risk to those Monday morning work comp claims. Moving along, the critical illness plan, this pays a lump sum benefit upon the diagnosis of a heart attack, stroke, kidney failure, or cancer. Now, what we did with our plan, instead of going wider and trying to create or offer protection for a lot of various other diseases, such as Rocky Mountain spotted fever, that's often covered in a critical illness plan, but in my 20-year career, I've never paid a benefit on it or have seen a benefit claimed on it. We went deeper with the four that account for over 90% of the claims in the market. So with a $10,000 benefit, as an example, a $10,000 policy, your folks will be covered $10,000 for heart attack, $10,000 for stroke, an additional $10,000 for kidney failure, and yet another 10,000 for cancer. So it's covering 10,000 per category, but that 10,000 can actually be doubled because with this plan, you can collect up to a 50% recurrence benefit per category. That means, God forbid, you have a heart attack today, 2 years from now, and 5 years from now, you've now collected on the plan 3 different times and still have coverage for stroke, kidney failure, and cancer. This plan also pays a $50 wellness benefit. That means if your folks are going for their normal wellness exam, 100% covered by the major medical, this plan is going to give them $50 just to go. That's payable on employees and covered spouses. In fact, that wellness benefit, it's actually going to be $60 over here on the accident plan. For anyone that happens to have both plans, if they had the one visit, they would be paid twice because anytime the plans overlap, the benefits do as well. But for folks like myself, I had open heart surgery when I was 11. It's only through an opportunity like this I can cover myself because, again, this is guaranteed issued, no questions asked. The last plan is the hospital plan. This is the most inclusive because whether it's accident, injury, sickness, disease, or pregnancy, makes no difference. If someone's admitted to the hospital, this pays out $1,000 for being admitted, plus $100 every night they're there. The high plan doubles everything. It's going to pay out $2,000 plus $200 every night you're there. Now, one enhancement we made this year is we took a step back and we recognized that a lot of times when folks go to the emergency room, they're held for observation, sometimes for 2-3 days at a time without being admitted. So we now will pay that daily confinement benefit for every 24-hour period of time that someone is in an observation unit, not necessarily admitted to the hospital though. And so we've expanded the coverage to be more inclusive, to really help to offer that additional layer of protection for folks. But this is the accident, critical illness with cancer, and the hospital plan. These are the 3 foundational plans that we see offered in many benefit packages out there today. And these are going to provide that additional layer of coverage, return the surplus, and make it easy to administer for those doing the work within your company. Now, one more thing I want to go through before handing things off to my colleague, Greg, is included in each of these plans are some never before seen value adds. First of which is Money Map. Money Map helps direct folks where to go to avoid those high cost hospitals. Meaning if they need outside or outpatient surgery, it's helping them to identify outpatient clinics within their network. So whether you're using Aetna or Cigna, major medical provider out there, it's searching your network to help to identify some of those low-cost treatment centers so that folks don't need to go to the high-cost hospitals for everything. Pricing Portal is a tool to help them expect what to pay. Now, the last is the hospital bill eraser, and I'm going to play a short video to illustrate how this works. This is by far the biggest differentiation with our products and the way they're built. Other than that surplus we're providing back, this is one of the benefits that's built into our products that's never before been seen. And I'll play this short 2-minute video to illustrate.
100 million Americans are entitled to free or discounted hospital care, yet few know it. Nonprofit hospitals are required to give free care, yet they skirt their obligation to do so. Let Hospital Bill Eraser take on the burden of dealing with the hospital bill for you. The free care zone is in the blue part of this chart. It's based on household income and family size. That's free care waiting to be had at thousands of hospitals. Many hospitals have a sliding scale discount for care, up to double the dollar amount shown. Hospital Bill Eraser's free care worksheet has created a savings calculator so that the real amount owed is shown. Hospital Bill Eraser has indexed the financial assistance, phone numbers, applications, and policies for each hospital. This permits us to quickly begin to erase a hospital bill and explore the details of a financial assistance policy to assure the best outcome for our members. Hospital Bill Eraser also can be used proactively for elective care via our free care map. For example, by knowing a pregnant woman's household income and number of family members, Hospital Bill Eraser can quickly determine which hospitals can provide her a free delivery. No hospital permits pre-approval for financial aid, yet our detailed review and analytics of each hospital greatly facilitates free care. The application to erase the bill can be completed, ready, and waiting. Hospital Bill Eraser has a medical bill negotiation wizard ready to help detect the all too common billing impropriety associated with inflated surprise hospital bills. The Eraser software wizard helps analyze 20 different opportunities to lower a hospital bill and automatically generates a medical bill negotiation letter. Kick back, relax, let us take on the hospital for you.
All right. And so that's the hospital bill eraser, taps into the 501R of most of these hospitals across the nation are designated charity care hospitals in the tax code. This means they're obligated to give free care back to the community. The problem is the community doesn't know it exists. If they know it exists, they don't know if they qualify. If they know if they qualify, they don't know how to apply. This helps with all three. However, for those that might make too much money not to qualify, this is also looking at their hospital bill to see if there's any errors. Were they charged for 2 nights in the hospital when there was only 1? Does the diagnostic codes make sense for what they were actually treated for? Assuming their bill's 100% accurate and they make too much money, this is then helping to negotiate down that bill so that their out-of-pocket expense is limited. So there is something for everybody with this hospital bill eraser, regardless whether your employees are rake and file, living paycheck to paycheck, or highly compensated executives. The hospital bill eraser, money map, and pricing portal are built into each of the 3 programs we just went through: the accident, hospital plan, and the critical illness. So those are the foundational supplemental health benefits. I'm now going to turn things over to Greg to talk about the other components of employee choice.
Thank you, Sean. Appreciate it. Good morning, folks. Again, my name's Greg, and I'm with Breckpoint, and I handle the employee limited benefit part of this program. So Sean covered the VB products, indemnity products. There are also what we call the medical plans that employee choice also offers. By offering these plans, as Sean had mentioned in his, these also act as a differentiator for your business to set you apart from other competing employers in a tight job market. By putting these plans in place, you will now be able to better attract and retain much better quality of employee and get you off the continual hiring and retraining cycle that's costing you lost revenue. These plans also offer as a penalty A solution that meet the ACA Requirement Act. If your business has 50 employees or greater, you will need to have these in place to avoid both the penalty A and penalty B problems that you could incur if one of your employees went onto the exchange and purchased insurance and you didn't have these plans in place. What we're going to cover primarily today are the tax A or penalty A solutions, but we also can offer you various forms of the penalty B solutions, the MVP plans, minimum value plans, and they come in 3 different segments. One is a traditional just compliance plan that offers as a checkbox feature. You offer it, get the plan in place, and then you get the waiver signed, and you are now compliant. Then we do have what we call our MVP value plans. Sean had mentioned in his presentation that what we're seeing these days is a lot of double-digit increases in the current or the renewals of the major medical plans you probably or currently could have in place. By offering, Sean, back up just 1 slide, please. Thanks. So if you have these in place, by offering the MVP value plans, you offer very good benefits at a reduced rate compared to some of the renewal rates that you're seeing with the major medical plans. Like the indemnity products, all of these plans are on a self-funded chassis with the opportunity to get a return of unused claims surplus. But the other great part of these plans is they're all level funded, giving you extra protection and peace of mind so you have no exposure level. And like the VB products, these require no underwriting and are guaranteed issue. Employer contribution on these types of plans is optional. However, as Sean mentioned in his presentation, that if you want to take advantage of the unused claim surplus, we recommend at least offering the claims portion of the plans. So we're going to go now and break these plans down a little bit and explain what the differences are. The basic MEC plan is the original ACA compliance program. It provides very limited coverage and it covers preventative and wellness features only. And it includes a telehealth program and a discount RX program. All of the other plans that we're going to cover next have the MEC as a foundation. So that's why they're compliant. The Pro plan, so what we're going to do now is we're going to move into what we call the MEC enhanced plans. And the first one is the Pro plan, as it appears on the right side of the screen there. The addition, what we've done is we've taken the basic MEC and added more benefits and features. The plan covers primary care, specialist visits, urgent care through utilizing a copay pricing structure and includes a telehealth and a discount RX program. Okay, Sean, now we can go. All right, so now we've just taken these one step further. We've done medical bundle plans, and the first one is the Pro Select plan. This is based off the Pro plan we just covered, but we've added the accident indemnity product that Sean had mentioned on his presentation. The best part about that is it still has the add-on of the healthcare advocacy feature that features that hospital bill eraser. These plans with the combinations are offered at a reduced cost, and it makes these plans make a very nice combination because these types of plans are limited benefits. There are no hospitalization or surgery, but it covers all of the types of benefits and features that an individual would normally experience throughout a normal life or life period. So by having these plans in place, they'll be able to get all the basic care they need, plus have the ability to have an accident coverage included and get that hospital bill eraser. The next one is the Preferred Complete plan. This is we're just adding more and more benefits onto the Pro plan. So we've added in addition to the primary care, specialist, and urgent care, we're also offering a mental health feature, a maternity, a pre and postnatal, x-ray and labs, imaging benefits with the addition of the hospital indemnity product. Again, this is packaged together at a reduced rate. And again, it still has the discount RX program and the, go back one, just one, Sean, please. Thank you. Okay. All of these benefits do include the telehealth feature, which appears on the left, which is the virtual urgent care by Health Wallet. This is a 24/7 access to a doctor. This is great for folks that have very busy lifestyles that can't afford to give up time off, but it works fantastic for everybody. If you would, by utilizing this program, and instead of spending the day at the urgent care center for a minor problem, you can call in, talk to a doctor within 20 to 30 minutes, and the worst case scenario, they can prescribe some kind of medication for you. You can pick it up and you don't have to spend all day at the urgent care. This benefits not only the employee, but you as the employer, because the employee won't have to call off the whole day and you won't be stuck trying to find a replacement for them. The other part of this in every plan is in the Shield PBM program, which is a discounted drug program. It helps to get many free preventative drugs are available in this plan, along with some of the acute medications. It also offers a PAP or patient assistance program, which will help employees obtain high dollar drugs at a reduced rate or possibly a discount or going offshore. Okay, Sean, we go to the next one. Now we have the two ancillary products. One is the Dental Plus Vision. This is a reimbursement plan and it can be used for either or. It's a very easy plan for the employee to utilize. All they do is pay for the appointment, then submit the claim, and they'll receive a reimbursement for their services that they paid for. they can submit up to $1,800 in claims, and they'll receive a maximum return benefit of about $1,000. Excuse me. The Dental Pro is a traditional dental plan through the DentaMax network. It includes 100% of preventative services, and it has other schedule of benefits. So it's a true traditional benefit plan, dental plan, through a very, very wide DentaMax network. Okay, Sean, next slide. All right, now, finally, we have the Protection Pack. This is a product that features 4 unique subscription services that work together to help protect and prepare employees for many of life's challenges. It's broken into 4 sections, as I mentioned, the first one being the Digital Guard. It's an all-in-one protection from identity thefts, scams, frauds, and online threats for the whole family. And it works across a number of personal devices, whether it be a tablet or phone or your home computer. The second part of this is the financial wellness part. This helps people deal with navigate difficult financial decisions that involve big money. So that, whether it's, as you can see there, whether it's, major financial changes, buying a house, investments, all that type of stuff, they're able to reach out to a financial resource and have them guided through those issues. The third part of this is the legal services. And all this is legal support and advice through attorney consultations that are available. And finally, the last part of this is the pet care. It's just discount services on veterinarian services and pet meds. I want to spend a little bit more time, and we don't have a slide for this, is the MVP value plans. As I mentioned that at the very beginning, these plans would be a nice replacement for any major med plans, especially if you're getting a high renewal rate. These plans are easy to put in place. They're not comprehensive, but they cover a wide variety of situations and are also based on a copay platform. They are shelf rated, and the average price of them is about $400. So you get a lot of benefit for just a little bit of money. If you need more information about some of these plans, you can reach out through Stephanie, and she can get the information. And if we have to provide a proposal, we can do so. Thank you, Sean.
Excellent. Well, Stephanie, are there any questions for us?
Yes, actually there are. So just since we last left off with Greg and the MEC plan, Greg, is that plan available throughout the US?
Yes, all these plans are available throughout all 50 states, and they're all shelf rate, so they make them very easy to put into place. And as Sean mentioned earlier, there's no age banding or smoking, non-smoking requirements. And 95% of the situations, we don't require underwriting.
Okay, great. And Sean, back to you. For the voluntary benefits program, this question I think comes up a lot. What if somebody has an HSA in place?
Excellent question. So all 3 of our plans are HSA compatible. So not only can they have one in place, but they can still be contributing to their HSA. And all 3 plans, the accident, hospital, and critical illness, are HSA compliant and compatible, so they can work with those groups that have HSAs. Now, one other thing I will add is we see a lot of employers taking a look at their HSA strategies. For those that are contributing to the HSA for their employees, many studies out there show that when employees need to use an HSA for medical expenses, it's obviously providing dollar for dollar coverage. When you use a insurance plan like Employee Choice to fund it, though, it's paying about a 7-to-1 ratio. And so because of this, and because of this return of surplus, and because of some of the mass migration that employers have faced over the past few years, employers are starting to look at it and say, you know what? This year, I might want to reduce my HSA contribution and reallocate some of those dollars towards Employee Choice, thereby giving those that are needing the benefits more value and more financial protection plus understanding that they can then tap into that return to surplus, which, by the way, Stephanie, for 2023, one thing I didn't note, let me back up a moment, is that each and every year by law, we need to have an outside audit and share those results with each of the employer groups. So there's complete transparency. At the end of 2023, the audit we conducted, we returned about a little over 30% of gross premium back to each and every employer group, because that surplus is based off of each employer group's contribution or their share of premium, not claims. So even those that had a difficult claims year still received that surplus. So long-winded answer to a short question, but yes, they are HSA compatible.
Wonderful. And this question comes up a lot too. What is the minimum size of an employer that can enroll in these benefits?
Excellent question. So the minimum size is 10 apps sold within an account. And an application is a person and a product. So that means if one person participates in 3 different products, that equals 3 applications. So today, our smallest group is only 4 employees in the captive. However, our largest group is tens of thousands of employees. So this really has application across all industries, all geographic areas, all group sizes.
Great. Just a couple more questions. So you had mentioned in the beginning the surplus that's returned, and if it's employer funded, the employer can use that surplus to however they see fit. If it's employee funded, then obviously it has to go back and be used for the health and welfare of the employees. What happens if it's a combination of both?
If it's a combination of both, Greg, would you like to hop in on that one?
Yes, absolutely, Sean. So yes, so all of these plans in the shelf rates, there is a percentage of the rate that goes into the claims funding bucket, and we won't get too deep into that. But the portion of that is relatively minor. So in most cases, if the employer is contributing any amount of money, it will probably cover the claims funding portion of the plan. So we see a lot of situations where an employer will contribute maybe a quarter of the rate or a third of the rate, and then the employee has to pick up the balance. And we feel in most cases that even if they're doing maybe a $5 or $10 contribution, that'll be more than adequate to cover the claims funding portion. So as Sean mentioned, the employer will be able to utilize those funds as they see fit. Because the claims funding portion of these plans is usually so low, in most cases, the employer will cover that rate, or that percentage, I should say.
Okay, great. And then just the final question on this is, can an employer mix and match the products, or do they need to offer all of the products?
Good question. An employer can pick and choose whichever products they want to offer. Obviously, the MEC and MVP health insurance strategies are for specific groups out there doing something like that today, or maybe not offering anything and wanting to dip their toe in the water. The accident, hospital, critical illness, even the protection pack, sometimes even that dental vision reimbursement will be offered supplemental to an employer-sponsored dental vision. So in short, the employers can pick and choose, but keep in mind, the smaller the employer group, the more lines of coverage they may want to offer so that it's easier to hit that 10 app minimum threshold.
Okay, great. And I'm actually surprised this question didn't come up, because this is usually the first question that we get asked, that we will be sharing the presentation slides with everybody. And in addition, since we did record this webinar, we will be putting this on our YouTube channel, so you will all have access to it if you need to reference it for any reason. With that, there are no further questions, Sean or Greg. So I'd like to thank you very much for joining us today and making the topic so easy to follow. If anyone would like further information on this program, please reach out to your Acrisure client advisor. They'll be able to assist you in getting the program in place or generally answering questions for you. But with that, Thank you all, and we will give you 20 minutes back to your day.
Excellent. Thank you, folks. Have a great
Thank you.
Bye-bye.
Bye.